Hello, everyone. My name is Alex Schober. I'm the Senior Analyst for the Southern Cone at Frontier View. With me today is Mariana Cepeda. She's also an analyst for the Latin America research team, and we're going to be talking about our outlook for Argentina for the next year or two during this hour. Mariana, if you want to introduce yourself.
Yes, thank you, Alex. As Alex mentioned, my name is Mariana Cepeda. I'm an analyst for the Latin research team at Frontier View, where I cover our Andean and Caribbean markets. And I'm very much looking forward to hearing Alex's views on the next few months for Argentina.
Excellent. Thank you, Mariana. So basically, this is the agenda that we have for today. I'm going to start off with sort of a 30,000 view of our economic forecasts and scenarios, and then break that down into talking about our key assumptions for Argentina. And then finally, we'll wrap up with some business implications and industry trends for Argentina for the next 12 to 18 months. Overall, this is a time for Argentina that's extremely critical. There are upcoming IMF negotiations. There are elections later this year. There's still a lot of FX and inflation uncertainty. So I'm going to do my best to let's just say, uncover some of these uncertainties over the next hour so that you understand a little bit better about what's going on in this very complicated country. So let's start immediately with our scenarios. I know there's a lot of text on this page. I won't read it all, mostly just because we are going to be talking about each of these assumptions individually throughout the presentation. But I will mention that you can see on the bottom of the page our GDP forecast expectations, with the light blue bar being our base case. So you can see that we expect Argentina to experience a bit of a rebound of 4.7% in 2021, followed by a more moderate growth of 2% in 2022 and 2.5% in 2023. The green and the red bars represent our upside and downside scenarios respectively. And above this bar chart, we have our average peso per US dollar forecasts on the bottom of each scenario. So you can see, and we're going to talk a lot more about FX in a few slides, that we do expect a pretty strong depreciation of the Argentine peso this year, more or less in line with inflation. Meanwhile, in the downside scenario, we no longer expect a devaluation in 2021. I think for any of you who have been paying attention to our presentations over the last 6 months, I think this was the big fear that we had 3 to 6 months ago, that Argentina would potentially have either uncontrollable depreciation or devaluation sometime in the first half of this year. Now, we no longer necessarily think that's the case because of the current trend with soy prices, which basically will help the Argentine Central Bank bolster its reserves and improve fundamentals enough to the point where they could skate by without a depreciation or devaluation this year. However, I think the big risk comes next year. I think that a lot of this is sort of kicking the can down the road because the Argentine governing coalition has hinted more than explicitly about their desire to postpone the IMF negotiations until after October's elections. This creates a very sensitive timetable. We still expect in our base case for them to get a deal done either by the end of this year or early 2022. That said, I think the big risk is if this is delayed past the very early months of 2022, because Argentina does owe almost $20 billion to the IMF in 2022, which is money that they do not have. So if they do get to the point where we're early on into next year, there's no real deal on the horizon, then it's very possible that you could end up seeing a default on the IMF deal, which is something that I think is implicitly implied in these forecasts, and something that would end up causing this uncontrollable depreciation or devaluation to average close to 190 pesos per dollar in 2022 in our downside scenario. That all being said, there is upside here. I don't want to make this presentation entirely pessimistic. I think that any sort of deal with fresh financing and more robust economic plan stricken with the IMF sometime this year would be huge upside potential. I know Martin Guzman, the economics minister, has still reiterated his desire to get a deal done by May. Obviously, I think that timetable is extremely unlikely. However, if he does manage to get a deal done, say, before October's elections or right in October amid the elections or in early November with fresh financing and a pretty robust and credible economic plan, I think that could end up being a positive signal to the upside for Argentina. And then the other thing I think that really needs to happen is that there needs to be a very clear inflation targeting policy by the central bank, which is something I think is sorely lacking. And if you do see inflation targeted becoming what I say here, the modus operandi, or their mode of operating, or their main goal, getting to inflation to lower than 45% on average this year, especially towards the end of this year, I think that would be extremely positive. Now, as far as COVID goes, and I'll talk more about COVID later, I think the vaccination process and progress by Argentina has been a little bit lackluster. We've only seen about 6% of the population receiving at least one dose. This is pretty far behind many other countries in the world, especially behind Chile, which is obviously the regional leader. And there's been some supply issues and some procurement issues, and it seems like it's unlikely that Argentina can reach 80% herd immunity by the end of this year. We still expect that to happen in the first half of 2022, and the government manage ongoing outbreaks through more ad hoc and targeted social distancing measures, and not necessarily a new national lockdown. And as far as the global growth environment is concerned, I think this is one area where the base case and the upside are probably the same. That is to say that this is a main opportunity for Argentina at the moment, is these exports from very high soy prices. And this is going to help prevent a devaluation this year, as I mentioned. And it's also going to support economic activity, especially in the midpoint of this year when the harvest occurs. So overall, I think this is one area where the upside is clearly becoming our base case. And it's the clear opportunity that Argentina has in the immediate term. And I'll talk more about this when we get to the next part of the presentation. In the meantime, do you have any high-level questions for me at the moment, Mariana?
My only question would be here, I'd love to get your view on soy prices and the discussions of this being kind of another commodity super cycle. What is your view on that? Do you think we are looking at a period of sustained commodity-driven growth, or is this going to be more of a transitory effect?
My answer is that I don't think the government should bet on it. I don't think that we're in the same situation that we were in the early 2000s with the last commodity super cycle, with China growing by over 10% per year, with the global economy really surging, having a very vastly and accelerating middle class growth, especially in Asia. I don't think that's necessarily the same narrative as this year. I think a lot of this is based on China's reopening faster than expected. Generally speaking, commodities being a great inflation hedge and all the financial fears of inflation. So overall, I do think that it's clear that we're going to see high soy prices for this harvesting season. But for next year, I wouldn't necessarily bank on it. I don't think the same fundamental narrative is true for agricultural commodities, as opposed to especially copper, where there are commodities expert, but I wouldn't bank on having the same performance of soy in 2022 that we're having this year. And if we do have it, okay, great. The government's getting lucky again from an economic perspective, and that would be great for Argentina. But I don't think it's something that should be baked into our forecast for 2022.
Yeah, thank you, Alex. I agree.
Okay. So, you notice here that we are expecting a rebound in 2021, but as usual, we don't expect Argentina to get back to pre-COVID levels of growth until probably late 2023 or early 2024. And I'm going to be honest and say that that isn't a particularly impressive feat, given that Argentina was in a recession in 2019 anyways. And this is all to say that Argentina is probably going to be the slowest major market in Latin America to get back to pre-COVID-19 levels of economic activity. And there are a couple of reasons behind this. The first is that we're likely to see, and we've already seen, a decent amount of bankruptcies, especially from the small and medium-sized enterprise size of the equation. Argentina, through small and medium-sized enterprises, employs about 70% of the population formally. So anytime you see a massive closure or bankruptcies of the small and medium-sized enterprise, grouping, then it does really hurt employment prospects. I'm going to talk a lot more about employment later because I think the employment story in Argentina is pretty complicated compared to other countries in the region. But if you do have a slow employment recovery, which is something that we're fully expecting, that's lower real wage growth potential, and that's going to cause lower confidence levels. So this all creates relatively low structure growth potential for at least the next 2 to 3 years. On top of this, you have a fiscally constrained government, one that's trying to really rope in the fiscal accounts, especially one that has a significant amount of debt due to private creditors at the midpoint of this decade, and the fact that they have this deal with the IMF that they need to get done, and they're probably going to require Argentina to tighten the belt. So this really isn't going to create any favors. And Argentina, again, is going to be in this situation where they're going to need to create growth externally. They're going to need to create growth from private investment improvements, et cetera, in order to really get this narrative to more of an upside potential. Otherwise, we are looking at late 2023, early 2024 as a recovery point. As far as quarterly, it's going to be a bumpy year. We're looking at Q2 as sort of a good quarter because we're going to get most of the soy harvest in during the second quarter of this year. You could even see a higher bump than this in Q2 2021, assuming that it's a potentially even better harvest than we're expecting. But Q3 is when we start approaching the October midterm elections. You'll have your political uncertainty, lack of investment appetite during that time frame, and then Q4, once you have that political uncertainty taken care of, and you have the vaccination process probably much further along than it is now, hopefully, then you would see a pretty big uptick of growth compared to the third quarter. For downside, I think that this is really just coming down to a really stalled out vaccination process, potentially another wave of very significant social distancing measures in the second quarter. Argentina still has not experienced a second wave, unlike many other countries in the region. So it could end up being something that really derails the recovery path. And then upside is basically stable growth for the entire year. As far as currency goes, again, I think what I was saying earlier is the real worry, I think, about FX comes in 2022 and not so much this year, because you do have that potential of falling short or even defaulting on the IMF negotiations, and potentially having a pretty disorderly devaluation. Because even though the fundamentals are improving, they're not going to improve so much this year that they completely, eliminate the risk of a really disorderly peso crisis, like one we saw in 2018 and one that we saw in 2019 after the PASO. So it's entirely possible that we see that in 2022. In the meantime, we are expecting in the base case for depreciation to more or less equal inflation, mostly just because that's what the government is signaling and they can get away with it from a reserve standpoint. But we do expect inflation to slightly outpace depreciation in the longer term. And to be honest, one reason why I think this page is also telling, not just from a margin reduction standpoint and a bottom line standpoint for our clients, but you can see that currency depreciation in 2019 and in 2020 was a lot higher than inflation. This means that I think that there is upside risk, and by upside I mean higher risk and not necessarily positive for inflation, because there's still a lot of room to catch up for inflation from the money printing, from the fact that the official exchange rate is weakened by 71.5% in 2019 and 49% in 2020. That's a lot of potential slack in the economy to manifest itself in inflation. Therefore, I think when Martin Guzman says that the inflation expectations for this year are below 30%, I think it's a nearly impossible scenario. And I think if anything, there's more risk for inflation being higher than 46.3% on average this year than it is being lower. Any questions about this, Mariana? I'm going to go through each one of these assumptions individually in the next section, but I'm happy to answer any questions or doubts you have for right now.
I guess, what is the number one thing you would want our clients to look out for in terms of the inflation situation? what are kind of, I mean, you've spoken a bit about broadly about the big risks tied into potentially higher inflation than the government is necessarily expecting. So what would be that key takeaway?
Excellent question, and one that I'll talk about a little bit more detail in this next section. However, to answer your question a little bit quickly about two signposts that I think clients should really be paying attention to, and ones that we'll be able to inform you on as the year goes along, is how many or how much reserves the central bank can accumulate during that soy harvest season. Because I'll show you this in a minute, but reserves have basically been flat and marginally declining for the last basically year and a half. And if the Argentine government can't bolster reserves by 10, 15, 20 billion dollars during the next 4 to 5 months, and we see reserves only go up by like say 4 or 5 billion, I think that's a huge problem and potentially a big risk for currency depreciation in the longer term, which would have knock-on effects to inflation. As far as a more direct impact on inflation, a big problem has been the fact that government has been printing money to finance the fiscal deficit. Luckily, it seems like the government has started to reverse this a little bit and has started printing less money, or monetary growth has been less than inflation. Actually, I should say that the other way around. No, that was correct. But basically what that means is that we are starting to control monetary supply, and it's not expanding out of control, and the central bank is not financing the treasury to nearly the same degree as it was last year. If that trend reverses again and we start seeing the central bank finance the central bank again, that's inflationary. And I think that actually leads into maybe my first part of these key assumptions, which is the COVID-19 management at home. Because if you have a situation in which we do see a secondary outbreak in Argentina, which, as I mentioned earlier, is something we have not seen yet, and we have a situation in which the government decides to implement province-wide lockdowns and a new round of fiscal stimulus to relieve the situation, if the government decides to print money to finance that, which, by the way, is basically the only way the government can finance this, then you'll probably start seeing that monetary supply expand rapidly again, impacting inflation expectations and really causing a more significant surge of prices once the economy does reopen again, probably towards the latter part of this year. I think that's a big risk. I think that's something that I would be looking out for. So I guess to summarize the question, three signposts or indicators to look out for: reserves, especially during the harvest, monetary supply growth, and whether or not there is a massive second wave of the coronavirus in Argentina, and if the government decides to implement fiscal stimulus to try to bring it under control. Because I do think that Argentina is in a very tough situation from a fiscal standpoint, does not have the luxury as, say, Peru and Chile to just issue more loans or to tap into previous savings days. Don't have it. So it's going to be very problematic if that happens. I wouldn't necessarily rule out, though, that we do have more ad hoc social distancing measures over the course of the year. We probably will have a secondary wave. Hopefully it's not as significant as the one going on in Brazil or the one that's occurring currently in even Uruguay or Chile. And if this were to occur, we probably should expect some off and on social distancing measures. Maybe we see things at a municipality level, or potentially the minority of the provinces, and not necessarily a national lockdown. So I think that's going to be incredibly important to monitor going forward, because right now, again, I think Argentina is fortunately not experiencing the worst of a second wave as we've seen in many other countries in the region. But if last year was the example of the hammer and the dance, is the analogy that we like to use a lot, this is the hammer and the needle, is 2021. In other words, how fast can you vaccinate people versus contain an outbreak of the coronavirus? And this is an area where I think Argentina is falling a little bit short. You can see that Argentina has vaccinated close to 6% of the population at this point, which is not terrible, but it's also not great if we're thinking about that, keeping up that progress for the rest of the year. If you were thinking about just keeping that progress, you're probably not reaching herd immunity until late next year, early 2023. this is a wake-up call. Argentina needs to start vaccinating more of its population ASAP. And if this is the case and they're able to outpace the rhythm of new cases and new hospitalizations, then that's a very positive outcome, and Argentina could end up avoiding a worse secondary wave. But that being said, our base case is herd immunity in 2022. So I think that this is something that is not necessarily something we should bank on from Argentina. Any questions about the vaccination process, about what I mentioned about COVID-19 at home?
Yes, I guess I would be curious to hear about Argentina's process to procure different vaccines and why you think it might be that the country is sort of falling short in terms of what it could have achieved in terms of vaccination process.
So Argentina is making what I believe is a bit of a mistake by putting all their eggs in one basket, or at least that has been their shortcoming at the beginning of this year, where most, if not all, at the very beginning of the vaccines were Sputnik 5. That's not to say that that's not an effective vaccine. In fact, it's actually quite effective. But the problem with only focusing on one vaccine, notwithstanding where it's from, is that you're relying on one supply chain effectively. And luckily, Argentina has been able to sign deals with the Chinese producers, and they also have a deal with Mexico to produce AstraZeneca vaccines, but that has not really taken hold yet. That's been slower to really get off the ground. And they, for, in my opinion, relatively political reasons, decided not to go with the Pfizer vaccine. I honestly think that was a mistake by the Argentine authorities. I think that they probably should have put their trust in another vaccine. And one of the reasons why, on the contrary, Chile has been a very successful story in Latin America is because they have an extremely diverse portfolio of vaccines from numerous producers. Meanwhile, Argentina is really, right now, it's only banking on 2. It has a few AstraZeneca vaccines in the country. But that is creating bottlenecks in the supply chain. We've seen President Alberto Fernandez say many times we just aren't receiving the products from Russia. That's fine, but that's what happens when you only really put all your eggs into the Sputnik 5 basket in this case. So that's a good question. It's something important to monitor going forward because, like I said, Argentina does have enough deals wrapped up to vaccinate its population from a herd immunity standpoint. But I think the timing is kind of critical, and clearly we're seeing a bit of a delay. So the next point that I want, the next point that I did want to make was, I'm not going to spend too much time here because I alluded to this a lot at the beginning of this part of the presentation. Argentina just doesn't have the money to replicate what they did last year. Frankly, they didn't really have the money to replicate what they did last year because of their fiscal situation and, generally speaking, the lack of access to international credit markets. But they still did spend about 6% of GDP on fiscal relief, which is good. At least it was good last year to not force a worse economic scenario. I just doubt that Argentina is going to be able to find the capacity to do this again in 2021 without causing fears of a significantly higher inflation scenario in 2022. As far as the job market it goes, this is where I think there's a little bit more nuance, let's just say, in the analysis here, because if we're just looking at this chart, you think, oh, Argentina hasn't done so badly as far as job losses compared to other Latin American markets. I mean, you had in Peru, for example, 50% of the formal jobs lost in Lima at the worst point of the COVID crisis. Meanwhile, Argentina has put a ban on layoffs, and that's the reason why we're seeing jobs only going down by a pretty marginal amount between Q1 of 2020 and Q3 of 2020. I will say beware of this ban because if and when, well, when, it's not an if, when it expires and the government lets it expire, which we don't expect to happen until after the elections, by the way, then we could end up seeing a decently big wave of layoffs because right now companies are basically using loopholes to suspend people or to only hire people part-time. And we've already seen some companies basically go out of business. because they were faced with the decision of, do I lower labor costs? I can't do that. Okay, well, I have to shut the doors. And on the other hand, we've also seen small, medium-sized enterprises still lay people off, even though I'm not really sure how they've done so legally, but it still has happened. We can see it in the data. So overall, I think that's just something really important to keep in mind, especially towards the end of this year, going into next year, is that we could see very sticky unemployment in Argentina for the medium term, potentially for 3 to 4 to 5 years, and not see a very fast recovery from the employment situation unless we get a sudden surge of private investment. Now, as far as where the job market performance has come, and I think this is an interesting proxy to look at for just general industry performance, you can see that public administration has been the only sector to significantly gain its share of employment year to date in 2020 versus 2019. And I think this is not particularly surprising because most Peronist governments do try to bolster and support public employment. And I think that's something we should expect to continue. On the other side of this graph, I think construction actually has the chance of being an outperformer if we were to look at this chart in 2021 later on this year compared to this current state, because they are spending a lot of money on construction. Construction activities already began to recover in annualized terms, and I think this could be one sector that ends up being outperforming, as well as manufacturing, depending on where in the manufacturing sector you look. You can see that those both take up a pretty big share of formal employment in Argentina. Meanwhile, the leisure sector, we probably shouldn't expect to get back to pre-COVID levels of growth for a couple of years. So overall, this is kind of just a snapshot of where we see employment share going. It isn't necessarily to say that there are more teachers now than there were in 2019, but that sector has been a little bit more resilient than, say, construction and hotel and restaurants. From an SME standpoint, this is an interesting survey that we've been using from Facebook for a while. It's called Data for Good, the Future of Business Survey. It asks a lot of very in-depth questions for small, medium-sized businesses operating around the world. And you can see for the ones that they pulled operating in Argentina, that about 30% of businesses have already decreased the number of workers on their payroll. And nearly half don't plan on hiring any of them back. So I think this is significant and probably shows the decline of jobs that we do see in this chart, because these are formal jobs that we're talking about. But again, I think that this is kind of a concerning thing to look at, because if we do get economic conditions worsening, if there's another lockdown without the proper economic relief, or there is the economic relief and we're stuck in a situation in 2022 when we're bearing the cost of that relief, then you could end up seeing more layoffs from the small and medium-sized sector, which would be negative because, again, I mentioned earlier that Argentina has about 70% of formal employment through small and medium-sized enterprises. Okay, from the external standpoint, this is kind of where I want to get into the narrative of how Argentina is strangely in a relatively stable situation right now, but it becomes not so easy to say the same thing about later on in the year. And the reason why I say that they are in a relatively positive, immediate term scenario is because we're about to enter the country's agricultural harvest season. Argentina desperately needs exports. You can see in this chart that we've seen exports decline pretty badly in 2020. And this is very different from a lot of other countries in Latin America where we did see exports begin to recover or even surge, depending on what country it was, in the fourth quarter of 2020. Did not happen in Argentina, quite the opposite. So Argentina needs exports and export revenues to start bolstering the economy and bolstering foreign reserves. And the good thing is that is likely going to come because of the position that soy is currently in. Right now, soy prices are at their highest levels in almost 10 years. And basically the peak of the commodity super cycle. This is an excellent opportunity for Argentina to really boost up the soy activity. And one side note here that I won't talk about much else during the rest of the presentation is oil. As you know, Argentina is trying to build out the Vaca Muerta reserve at in Patagonia. And we've actually seen petroleum production increase pretty significantly in Vaca Muerta in the last couple of months. We're still not really at the point where Vaca Muerta is exporting. To keep going here. But overall, I do think that's something to keep in mind, that this could end up being an opportunity for Argentina as well. So the reserve situation, as I mentioned, is rather precarious. You can see that we're at the lowest levels that FX reserves have been in recent memory, especially as a percentage of GDP. And right, like I said during your question, we're going to need to see reserves really go up by 10, hopefully more like $15 billion, potentially even 20 during this agricultural harvest, in order to really help boost the central bank's capacity for adding credibility to defend the peso, and also to be able to help pay off debts in the longer term, because right now this is something that Argentina just simply cannot do. So I will mention that this chart shows gross reserves. Argentina's net reserves, which is what we basically take if we discount the foreign exchange swap with China, gold, commercial bank deposits into the central bank, basically liquid holdings is what we're considering with net reserves. It's close to zero. Or if we're looking at just liquid reserves, some local economists even claim it's negative. So we're going to need to see this boost significantly. And basically the reason why I bring up this net reserves estimate is because this is basically the amount of money that the central bank can use for discretionary purchase reasons, such as defending the peso. And a big reason why you saw this big depreciation of the unofficial exchange rates back in September and October is because there were a lot of doubts of whether or not the central bank could keep up defending the currency. And especially amid enacting new capital controls in September, which caused foreign investors and local investors to really question whether or not the central bank and Argentina's economics ministry could really last until the beginning of 2021. There was a lot of credibility issues there. Luckily, this narrative has changed a little bit. I will say, of course, these capital controls are mostly still in place, and we should expect them to stay in place likely until there is an IMF deal. I think the one thing that will likely go away is the US dollar necessity for external debt maturities. It's a pretty onerous measure. I don't necessarily think the government can keep up with that for another year. But this savings quota, the impuesto país, which is basically the tax on buying dollars, that will likely stay in place. And we already know that the access to official exchange market for luxury importers has been banned for a year. So overall, again, I think accumulating these reserves will help at least improve the fundamental situation of the exchange rate and help potentially narrow this gap between the unofficial and the official exchange rate, because this gap is starting to have an impact on producer prices, on consumer prices, and is something that is going to be difficult to control if the central bank can't close this gap a little bit more. The good thing is that it has closed pretty substantially from the worst points of 2020. Last point I want to make about FX and inflation, and I'll open the floor for questions, is that, I think I mentioned this earlier, the other major signpost to watch is monetary base growth. And this is an area where Argentina has committed this cardinal sin several times in the last several years. Even during the Macri administration, his first year, they were printing money a lot more than they probably should have been doing. And this was basically what was financing the Treasury in 2020 during the worst of the COVID crisis. You can see that monetary base growth in nominal terms was higher than inflation. But luckily, this has started to reverse in the last 2 months. And I think this is going to need to be a trend that lasts and, preferably just completely reverses, where you see monetary base growth fall pretty substantially this year, because that will end up helping sop extra money off the streets, especially as the economy begins to reopen, and try to eliminate this narrative that the central bank is just printing money. On the other hand, the other two measures that are going on, or monetary policy levers that are going on that I think are relatively inflationary, are one, real interest rates are negative, and they've been negative for over a year. There's no incentive to save pesos. If you have money in an account that has a negative real interest rate on pesos, why would you put your money into that account outside of just simple saving? So there's a lot more incentive to spend those pesos or to convert them to dollars, hence the gap that we see between the official and the unofficial exchange rate here. And that ends up causing inflationary pressures because traditional monetary policy would say, if you want to bring down inflation, you should bring up interest rates. But the central bank has been gradually increasing interest rates over the last couple of months. There's still a pretty big divergence between, let's say, consumer lending rates, business lending rates, deposit rates, the central bank's benchmark policy of the LELIQ. There's a huge divergence there. So some real interest rates are actually pretty neutral or even positive, whereas others are very negative. So there needs to be a little bit more of a correction there. And then the other thing that's concerning is price freezes, especially the utility freezes. This is one area where I think the IMF negotiations are going to get a little hairy, because the IMF is likely going to want the government to release some of the utility subsidies that currently exist. And the Macri administration remembers full well when they released the price freezes from the previous Christina Kirchner administration, and you had a huge increase in inflation after that occurred, on top of just being a politically unpopular measure. But it's something they're going to have to undo eventually. And the longer they last, the more and more inflationary it is to undo. And this is important for one major reason. Outside of, interest rate expectations and hurting the bottom line for our clients, it also hurts the consumer, and probably hurts the consumer more than any other aspect here, because real wage growth has been negative for almost 3 years, with the exception of one random month in November or in 2020. And this is really only going to become positive if you start seeing inflation go down. I think that's starting to become pretty key, especially when you're having a situation which roundtable discussions with the unions are really only yielding wages that are about the government's expected inflation, which is not what we expect inflation to be. So overall, I do think that real wage growth will continue being negative for most of this year. And really the only way that you get it to be positive again is if you correct the inflation story. So that was a lot, Mariana. There's a lot of complicated views going on there with FX and inflation. I do want to see if you had any clarifying questions here.
You talked a little bit about this already, but I think I would be curious to hear, I'm sorry, there's a little bit of an echo, but I think that's gone. What type of inflationary effect we might see from lifting capital control specifically?
Okay, that's a good question. I think maybe for reference, it would be good for us to see what kind of capital controls actually exist. I think that the main problem potentially with lifting capital controls prematurely is that you could have an immediate depreciation to the market rate, which is effectively this dollar blue. I think that would cause pass-through effects through importing. And you could have a lot more imports going into the market, and importers basically passing on all of that increased cost onto the final consumer, or at least most of it. Even if you end up only just throwing about 50% of it to the final consumer in terms of a price increase, that's inflationary in of itself.
Yeah, absolutely. That makes a lot of sense. Thanks, Alex. The other thing I wanted to ask was about real wages and whether you expect to see, I know there's this kind of gap between real wage growth in the private and public sectors. Is that something you kind of expect to continue seeing with this current administration?
It's kind of weird, right? If you think about it, like if you remember the labor market slide that I showed you with public administration being pretty stable in terms of total employment. Meanwhile, the real wages for the public sector are falling more than the private sector. I think that probably has something to do with the fact that in order to keep more people on the payroll, maybe the salary increases in the public sector compared to inflation are a lot lower than the private sector. So overall, I think that this gap, I don't know if it's significant enough to comment on whether or not it'll continue. I feel like it probably should converge in the medium term. But I think the reason why this is the case is just because the government has tried to keep more people on the payroll one way or the other, even if that means slightly lower wages compared to inflation.
Right. That makes sense. Thank you, Alex.
Yeah, that's a good question. I think it'll be interesting to follow that going forward. So I think what we've all arrived to is, I mentioned at the beginning of this part that Argentina is in a strangely stable standpoint for the next 3 to 6 months, while the agricultural harvest is happening. And this has caused us to change our base case regarding the IMF deal. And our previous base case, was that there would be a deal potentially at the end of this quarter in 2021 or the beginning of Q2 of 2021. It's clear that's not going to happen anymore. And there are a couple of reasons why we no longer think that's the case, but I think the main reason is the thing that's boxed out in red in the negative signposts for the IMF negotiations, and that is that it's clear that anti-IMF rhetoric has intensified among the governing coalition. I would argue from a political balance standpoint that the Kirchneristas are having a larger sway of influence on economic policy currently. And this has basically opened the door for Alberto Fernandez taking the comments of we should wait until after the elections to get this deal very seriously. And I think that the only reason why this has really become possible is because of the soy harvest. I think if the soy harvest wasn't happening, or if it was just a regular year, if there was a drought, there was no way that the Argentine government could have the luxury of waiting until after the elections to strike this deal. Now that this is the case, I do think that it will not happen until after the elections. The clock starts ticking very quickly when we get to November of this year, however, because as you can see, Argentina has close to $20 billion due to the IMF, both in 2022 and 2023, in principal and in interest. I think this is clearly money that Argentina doesn't have, and they're going to need to renegotiate this deal to have the maturities be further down the line. I think that there's ways that this could be a better deal than else. I think that they're going to need a credible medium to long-term macroeconomic plan, which has been probably the primary criticism of the Fernandez administration from a policy credibility standpoint. And also, I think there are going to need to be exit guidelines from the current capital controls during the next couple of quarters after we get a deal. I think the last positive signpost here, and something that I don't necessarily think will happen in the base case, is the openness to new net financing. I think if the Argentine government could get, on top of the debt rollover, $5 to $6 billion more from the IMF in a new deal, I think that would be great to at least alleviate pressures of central bank money and deficit financing, et cetera, et cetera. But the relationship between the IMF and the governing coalition is relatively rocky. The key question that I've gotten here over the last couple of weeks, though, is, okay, well, Argentina still owes like $3.5 billion to the IMF this year. How are they going to pay it? So my answer to that is kind of complicated, but I'm going to walk you through this in the easiest way that I can think of. So there are certain cash inflows that Argentina will have this year that they were not thinking about having in 2020. The first is from the soy exports. I keep saying that, but it's worth repeating that that's probably going to fill any hole that the government is going to have with paying this debt. The second thing is that the IMF is doing something called special drawing rights for emerging markets, and Argentina will likely get about $3.5 billion from the IMF in a separate agreement. It's not even really an agreement. It's basically a credit line to Argentina in the form of 3.5. Even though Argentina owes 3.5 to the IMF and another billion or two to the Paris Club of Creditors, between that special drawing rights and the soy exports, I do believe Argentina will have enough money to pay both of those creditors in 2021. And if not, Lord, God forbid that they don't have enough money, they could potentially issue money locally and effectively print pesos to convert to dollars, even if that's at an unfavorable rate to pay the IMF and the Paris Club, just because the amount of money that they do owe this organization pales in comparison to 2022 and 2023. The other reason why I think it's important to keep in mind that Argentina's had the luxury of delaying this deal is because there's been sort of a gradual fiscal consolidation, whether it's from the government doing this in a sustainable way or not, and I would argue it is not. Basically, the government is probably going to get a lot of export royalties from soy revenues, and you're going to see government revenues do pretty well. And honestly, the fiscal adjustments and sacrifice that Argentina would have needed to make in 2021 will likely happen because of this. In fact, I actually think the fiscal deficit for Argentina could be a little bit lower than even the government's projections if you do get a really bumper harvest as what we're expecting. Now, in 2022, I really hope the government doesn't expect this to be a replication of the same scenario, because the reality is they need to cut spending. There is not really a scenario in which you can think that taxes can go up, that they're going to increase tax revenues one way or the other, because the tax burden in Argentina is already arguably the worst in the world. So I don't think that there's necessarily a situation in which we could replicate the same tax measures that we saw this year with the wealth tax and this year with the soy exports in 2021 to keep up from primary spending. Argentina is going to need to cut subsidies. They're going to need to find a way to have more sustainable pensions, and they'll probably need to cut public administration costs as well in order to really strike the right balance with the fund in this regard. This is clearly all going to have a political impact, and I do think this is the main reason why you will see this deal delayed until after the elections, is because the government doesn't want to strike a deal with perceived fiscal adjustments in 2021 if they can avoid it. Despite the fact that a lot of this is already happening naturally, as I just mentioned, and the fact that the IMF's not going to give money for free anyway, I think this is just a tough pill that the government is going to need to issue the population and say, this is where we're at, and this is what we're going to have to deal with for the next few years. But I don't think they want to do that in 2021. And because of that, I do think we're looking at a situation in which the relative stability of this year is probably going to help the governing coalition on one hand, but I think the outcome of the vaccination campaigns and how Argentina does with subsequent waves of COVID-19 is going to be extremely important for this as well, as is the management of inflation. And that's something that is starting to get worse. And you can see on this chart on the right that polls suggest the Argentines care more about the economy right now than they do about the coronavirus. They also care a lot more about crime. And this is one area where I do think if we're thinking about what the median voter wants in Argentina, I do think that inflation is going to play a role in how people respond to the polls. And I think that my base case right now is that you would have the more moderate factions of Peronism, more so the allies of Alberto, lose a percentage of seats in both houses of Congress in 2021, whereas you have more radical elements of Kirchnerismo probably winning seats. And I also think that Juntos por el Cambio, which is the main coalition of the opposition, winning some seats as well because of their anti-crime, anti-corruption, economic prudency sort of platform. So I think that overall, what does this mean? I think that governability is to start becoming a problem and a challenge in 2022 before the re-election campaign of Fernandez in 2023. Because if you have people who are more left of center, basically dominating the governing coalition versus more people who are right of center through Juntos por el Cambio winning seats, you're basically widening la grieta that has existed in Argentina for as long as democracy has been back in place. What does this mean for the 2023 elections? I think it's too early to tell, but I do think that this is going to cause a decent risk, and as far as political risk and policymaking risk is concerned in the medium term, just because I think the most likely outcome of this election is not a consolidation of the Alberto Fernandez governing coalition, but more so a widening of the ideological spectrum in Congress. Any questions here?
Thank you, Alex. Yes, that's all really interesting. I guess just to kind of keep going down that same track, I think something you've hinted at is the potential for social unrest, and that's something that we're seeing across the region as the COVID-19 pandemic kind of begins to get under control, and then you have all of these different impacts left behind. You have a population that's just dealt with a huge economic crisis and public health crisis. And then in Argentina, you're going to have the government having to take some unpopular decisions that might be very necessary from an economic standpoint, but aren't going to, make anyone very happy. So what do you think that might look like, just from a social unrest standpoint?
So I think that I'm going to answer this question in a few different parts. The first is talking about short versus long term, and then talk about reasons for social unrest really throughout the region and not just Argentina. So in the short term, I honestly think the risk of social unrest is pretty low. We're looking at a situation again where I think that the government has a pretty popular mandate. We're going into election season. There'll probably be some pre-electoral spending. A lot of the fears that existed in 2020 about devaluation, they're receded pretty substantially. So I don't think there's a huge risk of social unrest this year. But next year, if we get into a situation in which we are starting to implement IMF reforms, and I do want to say that I think the IMF will be relatively lenient with Argentina, but nevertheless, like any sort of fiscal consolidation, any semblance of a labor reform or a pension reform does naturally cause unrest in Argentina. Whether it gets the same level as it was in Chile or not, I think is probably pretty unlikely. Just because, I think this kind of leads to my second part of the question. I think the reasons for protesting in a country like Chile are different than a reason for protest in Argentina. Whereas in Chile, the demands for more equitable cost of living and incomes and public healthcare, public education, etc. I think that those are features that actually don't really exist in Argentina. For example, Argentina does have a relatively decent public healthcare and public education system. They do have, I would argue, an overly generous pension system. So a lot of these more fundamental factors from a personal standpoint are not as acute in Argentina as they are in Chile. For example, I doubt that there's going to be huge income inequality protests during a Paredes administration, but I could be wrong. I think there's a bigger chance of social unrest if it comes from what does unemployment look like after the ban on layoffs weighs off and the government has to cut back on spending. What if there's a depreciation or currency crisis next year? What if inflation goes above 60% again? I think those are more reasons for more Spitfire kind of protests as opposed to structural social unrest, which is occurring in Chile. I think it's a long-winded answer to your question, but I think it's a very interesting one because Argentina is kind of Argentina, Brazil, and Mexico are probably the exceptions to this worry that we have about social unrest happening like immediately after the pandemic is done.
Yeah, that's really, really interesting. Thank you, Alex. That was a great answer.
Thanks. So just to cover a few industry trends in the last 5 minutes that we have, I'm going to go through here pretty quickly because I did infer a lot of this already. If we're looking at economic activity broken down, we are starting to see an improvement already of manufacturing, construction, and financial services, while wholesale and retail sales are really lagging behind. And you're also seeing that there's a lot of divergence even within manufacturing, with the automobile industry, for example, being significantly lower than capacity than, say, the oil refining sector or the metal working sector, which is something I'm not showing on this chart, but I'm just telling you anecdotally. Meanwhile, if we're looking at confidence indicators, we're still at pretty low consumer confidence. I think this is pretty much the norm across the region. I think the only thing that maybe is not the norm here is that I was a little bit surprised that consumer confidence didn't fall even more in 2020. And honestly, I think the reason why this is the case is because Argentines have been pessimistic really since 2018. And the coronavirus crisis wasn't exactly like a brand new economic crisis. Let's just put it that way. So overall, I don't think consumers are going to become optimistic again until we have more policy certainty, until we have inflation starting to become under control. There's more trust in what's going to happen with FX policy going forward. Meanwhile, businesses have started to recover in confidence as well. I think that the key for them is going to be also the policy certainty elements, which is something that's lacking. I do think what's interesting, though, is that small, medium-sized enterprises are rather upbeat. If we're using that Facebook survey again, you can see that the majority are either optimistic or extremely optimistic. That's certainly a good thing if we were considering that jobs chart that I showed you earlier on, where a lot of companies were consolidating. And because of this, there are opportunities targeting the small and medium-sized business sector, with especially digitalization in the coming months. So you can see that there are a lot of companies who really would love support for finding new and alternative markets, support for increasing use of digital tools and the digitalization of their business. I think this is definitely something that is a trend that's here to stay after COVID. It's something that I think that our clients who work in the IT sector and the tech sector could end up taking advantage of. Finally, as far as industry performance, this is kind of similar to the job charts that I showed you, with industry growth in 2020 on the y-axis and industry growth in 2019 on the x. You can see that basically all sectors contracted year to date in 2020, which is not at all surprising. But if we look forward to 2021, I think what's going to be interesting to see is what sectors end up recovering pretty well. And this is where I think you're going to start seeing improvements of construction and civil works. I would actually already argue that we are above COVID-19 levels in the first quarter of this year. Agriculture is going to be a significant outperformer, as I've mentioned several times. I think we're going to start seeing fast-moving consumer goods clients have a rebound of sales later on in the year. And then IT and telecom will continue to be relatively winning sectors. On the other hand, construction, the commercial and residential real estate probably going to lag behind. Manufacturing is doing pretty well, but there's so many divergences within the manufacturing sector in Argentina that's difficult to say with a lot of conviction that we are going to be somewhat above pre-COVID levels of activity. And extractives are doing relatively well too. So just to finish things off, consumer spending is unfortunately really lagging in terms of the overall industry picture for Argentina. You can see that we expect that consumer spending fell by significantly more than GDP in 2020 and will recover decently well in 2021. But this ends up really just becoming a question of inflation and whether or not we can get inflation under control and also get a solid job recovery, which is something that I mentioned earlier on in the presentation. So I think that is really all I have for today's presentation. We're right at time. So I wanted to thank everyone for their time. And Mariana, I do want to see if you have any final questions or comments before we end this recording.
Wonderful. Thank you, Alex. No final questions on my end, but thank you so much for a fantastic overview.
Thank you.